Hey folks, welcome to the first video of a general series I'm going to be putting out on simple technical analysis in the Forex markets. Um, this can be applied to all markets. I prefer the Forex markets simply because I enjoy it more, and um, just the fact that it's 24 hours. You could trade the stocks, you could trade futures, can be used in the S&Ps quite easily. Um, but everything in this series is going to be geared towards teaching or making seemingly hard technical analysis um, ideas and functions, make it simple for people to understand. Just the quick basics. So this is the first video. I'm just giving this a test run. I'm using the Thinkorswim platform, which I won't be using for long. I'm going to go back to my MT4 setup, but um, due to my software situation, I'm trying to find a good recording software for Windows, and I'm using my Mac, so this is all I have for right now. This video is going to be about higher highs and lower lows. So let's start. I already clicked that. Anyway, let's start simply. This is all market price action right here, all of this. So let's start. Market starts trading here. Market goes up. What do we have here? We have the base, the beginning, and now we have a pivot high. Market retraces and ends here. Here's our pivot high. Here's our pivot low. Market continues, goes up. What do we have? We have pivot high. We have a pivot low. Now we have a new pivot high. This is classified as an uptrend when we have a series of higher highs and higher lows, just like this. Higher high, higher low, higher high, higher low, higher high. How do we determine that we're in a ranging market? Well, if price stays in between the new higher high, which is here, and in between the higher low pivot, if price, say it didn't keep going, say price just, let me select it. Say price, instead of breaking higher, decided to go here. And then price just does this, does this, does this. We're in a ranging market. We'll be back to trending when price decides to, price will break the previous higher high. Now we've resumed our uptrend. It'll normally retest the breakout, come down, make the higher low, which look at higher low, higher low, higher low, higher low, higher low. How do we determine a market reversal? Well, a reversal of the trend. This is obviously an uptrend. The market is in an uptrend. What needs to happen is a lower low needs to happen, followed by a lower high. So at this point, what we're watching for is a lower low to be made. Where is our previous lower low? It's right here. This is the major pivot though. Why? Because this took place inside a range-bound situation. This is your main pivot right here. We need to watch for a break of that. So say if the market comes down, breaks the lower low, comes up, makes the lower high pivot. We are now in a bearish situation right here. Bullish, range bound, market top, bearish. We're now in a bearish situation. Now, the market's not just going to keep doing this. It's not that simple. The market is random. It's not going to make clean pivots. You look easy. It's not going to be easy. If it was random, we would never lose money when we're trading, but it's random. We can only, and this quick lesson is just to show simply how we can tell if the market is acting bearish, is it bullish, or is it ranging. So let's just go to the chart here. we have the pivot high right here. There's our pivot high. Here is our high or low based on this pivot right here. This is the major low pivot. Made the higher high, made the higher low. But then what happens? We get a lower high right here. If the market was truly bullish, it would have broken above this previous higher high. It would have kept on going. But came down, bounced around a little bit, made a lower high, and what did it do? It broke the previous higher low right here. It broke it. That's the breakout right there. Broke it, and what's it do? It retests it. Breakout traders would have shorted this right here. I'm not a breakout trader. I'm just showing very simply what the process does. Breaks the higher low, which is here, comes up, retests, and what does it do in the process? Look at here, a lower low, followed by a lower high, high pivot. When I say a lower high, I mean a lower high pivot or a lower low pivot. Pivots are points on the chart where the market, where price turns from. It's a pivot point. It pivots away from areas. Again, breaks the previous low, comes down and establishes what? A new pivot low right here. Followed by, again, a lower high. This, from this point to here, we have a bear market. Market continues lower, no surprise. We're bearish this whole time period from Wednesday to Wednesday. In the 1 week, we were bearish the euro. Market comes down and establishes a new lower low. Now, what happens? What is the clue here? Why did the market decide to bounce from this area and continue on all the way up here? Well, we didn't know this was all going to happen. But we did know, at this point, we did see this, and I'm going to show you. If the market was truly bearish, it would not have broken the previous lower high. And look what it did. Market came up. It should have turned around here. And you could see it wanted to. A couple of bear candles, a couple of reversal candles. It wanted to turn around right here and keep going lower. But for whatever reason, it could have been a big bank, could have been institutions, could have been just fundamentals, who knows. But at this point, market made what? A higher high. Why is it a higher high? It's a higher high than the previous high pivot. First sign, market might be turning. Then what's it do? Comes down. This was the breakout. Comes down, establishes a higher low. So we have a higher high in and a higher low. What does this signify? We are now in a bull market. Market continues, bounces down, and this is very common when a market is going to change or shift its trajectory, its trend. When it's going to change its trend from bearish to bullish, you're going to have some chop, and this area I consider chop. You don't know why I was doing this. Institutions and big banks know if the market continues further in either direction, it will continue the trend. So obviously they wanted to push this thing higher. So the same example from here continues on. We have higher lows, higher highs, and I'll point out each crucial pivot for you guys. Here, 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 to here. Higher low, higher high, higher low, higher high, higher low, higher high. This whole time you'll notice one consistent principle. The market never closed below the lower high. which signifies the market is in a strong uptrend. So what happened here? This whole area, this was the true low pivot, and that's why the market stalled here. The market fell off the table. Look at all these topping candles, by the way. Market falls off the table and comes down to the crucial low pivot, which is right here. This was a crucial area right here. So what do we have? A new lower low was made right here and continued on, followed by a lower high. We are now in a bear market. This is all just on the 4-hour chart. So we continue lower, make a lower low, lower high, lower low, lower high, lower low, lower high, and now we have a new lower low. This is where the market is at right now on the 4th of July, 2013. So what should we expect? Well, it may want to challenge the 128 area, which is right here, simply because that's where it was last time. And one crucial principle that we have to remember is markets always like to return back to where they were. They love to revisit areas. They love to return back to the scene of the crime. They will always come back to where they were at some point. Could be now, could be way later, we don't know. That's just based on market psychology, on human psychology. So we may head down to here. This is an interesting area. I'll be watching it. For now, we're in a downtrend in the euro, and my bias will only change if we break this or the previous lower high, close above it, and hold above it. If we, which is around the 30-30 area, this area here, that's right now, we're in a bear market. Does that mean I short now? No, but potentially we may see a bounce here to this area, come on down and continue on. Market is kind of overextended, but at this rate, if it's lasted this long, it's not just going to turn around on a dime. In other words, the market's not just going to go from here and just shoot straight up. It's impossible. Not impossible, it might happen, but generally you can't trade that way. What's probably going to happen is we're going to retest, come down, retest, come to this area, and you may see a fake breakout down. If this area is going to hold, you may see a little fake out, and then the market will make its new higher high. It'll break the previous lower high here. That's potentially what to look for. So watch this area. The 128 area is important, and I'll be watching it. Well, it's been 13 minutes. Hope I didn't bore you for too long. I just wanted to start putting out some good, honest videos on YouTube instead of, I just see so much trash and garbage. People will just post anything on a whim, and it's all just about making money. And yeah, I plan to make some money off of what I'm doing, but just based on website advertising and possibly just ad clicking. I'm not going to charge for anything that I'm doing. People need to learn how to trade, and I'm trying to show simple principles for them to set off on a good foundation, on a good footing. This is all done because I love to trade, and I want other people to learn too.